Yeah, I think we have it all now. Yeah. Okay, fair enough. Now, my dear friends, the concept is very simple. Hello, Smith. Hello, everyone. So, straight on point, the concept is very clear. We are first going to do section 17, 1, 2, 3, read with rule 42, rule 43, and then we will do 17, 4. And there's another video that I'm making only for 17.5, right? So we will do ITC in parts, because I feel the shorter the video, the better it is. Just is very engaging and this helps students, right, in a lot of ways, especially mentally. So right now, my dear friends, the focus is on the most important one, which always is asked in the exam, but for some reason students find it very difficult. I don't know why, but let's directly hit it. Okay, now understand, my dear friends, right now what we are doing is 17, 1, 2, 3 read with rule 42, rule 43, right? Now what does 17.1, 17.2 and 73 talk about? Okay, so let's take it one by one. When it comes to 17.1, my dear friends, okay, one thing that we are concerned about here is with respect to common credit, right? So here what has happened is that there is common goods or services that we are using, okay, for partly for the purpose of business, partly for the purpose of non-business, right? So this is your non-business purpose. So classic example, if I want to give you, is very simple. For example, understand, if I have a home, right? I have a premises, my bad. So I'm a registered person and I have a premises and I'm paying rent on that, right? Now half of the premises I am using to take my coaching. So I'm into coaching business, I am teaching students, and the second is, my dear friends, used as my home. It's my house. Now understand, my dear friends, very clearly that with respect to this rent, okay, understand that the rent that I'm paying, let's say I'm paying 1 lakh rupees per annum, per month, my bad, and GST is 18%, 18,000. Now the question is, what will happen to this 18,000? Will I get it all, or will it be completely not eligible to avail it, right? What is it? Can I completely take it, or can I completely not take it? Answer is nahi. Okay, I can take thoda, I can leave thoda, right? So now how much can I take and how much am I ineligible to take? Who will tell me that? Who will tell me that? Is the proper officer going to come? No. Okay, my dear friends, it is none other than rule 42 and rule 43. They are going to give me that margdarshan, they are going to give me that guidance, okay, that this is what you need to allow, this is what you need to disallow, my dear friends. Okay, so we will go, when we go there we will see what happens, right? Second, my dear friends, is with respect to 17.2. So this was 17.1 and the second is 17.2. Now 17.2, my dear friends, is also a very interesting concept. So before I reach 17.2, I'll just ask you a very simple question. So you are basically purchasing taxable goods or service, correct? What if I tell you your output is giving taxable supplies, right? Will you get the ITC of this? Answer is yes. I can get only, I can avail ITC only if I have output tax. I can avail ITC only if I have output tax. If I don't have output tax, I cannot avail ITC, and which is why if instead of this the person was supplying exempt supplies, there is no way I could have get ITC. I could have got an ITC, right? And but the entire situation is not confusing here. Here the concepts are very clear. If I make outward supplies which are taxable, ITC, I get it. Exempt, ITC, I don't get it. But when I come to a registered person, who comes with a problem where he has purchased any goods or service, correct? But with that, thoda he is giving taxable supplies, and thoda he is making exempt supplies. In that case, what will happen? Right, in that case, the GST that is paid as input tax, what will happen to that? Will it completely be allowed, or will it be completely disallowed? That is the question. Answer is very simple to that. Rule 4243 will help us understand that. Make sense? Yes. I'm not going to section 17.3 because 17.3 does not talk about any situation per se. It talks about something that will be useful to us when we are doing computation in Rule 42 and Rule 43. So we will go as and when we get the right time. Got it, my dear friends? Say yes, sir. Say yes, sir. Be fully enthusiastic. Okay, very important, very important, very important. Okay. Now, this is correct. This is correct. Okay. So Rule 17.1 we are talking about business purpose, non-business purpose. Rule 17.2, section 17.2. My bad. We are talking about common credit used for thoda, exempt supplies used for thoda, taxable supplies. A classic example of this can again be, for example, I have taken a premises on rent, and let's say, okay, partial premises I am using for giving coaching service, right? And partial, okay, premises I am using, my dear friends, let's say for something like education service, where I'm actually running a preschool, right? And preschool is exempt, as you all know. So in that case, what will be the case? What will be the situation? The goods or the services that I'm procuring, to give this services that I just mentioned. One is coaching service, one is preschool service. In that case, what will happen, my dear friends? Will I get ITC or not? That is the question. Okay. Again, Rule 42 and 43 will help. Okay. Now, firstly, we will address Rule 42. Right. Rule 42, my dear friends, is with respect to, okay, ITC in relation to inputs and input service. Okay, ITC in relation to inputs and input service. Inputs and input service. Gotcha. Okay, so here there is a question of common credit that you really need to answer, my dear friends. That you really need to answer, right? But that common credit is with respect to input and input service. We are not talking about capital goods here, because capital goods ITC, the common credit ITC, will be spoken in Rule 43. Okay, so Rule 43 only for capital goods, Rule 42 input and input service. Get that very clear in your mind. Get that damn clear in your mind. Are you getting it, Purvi? Are you getting it, Purvi? Absolutely. Okay. So I hope this is very clear, my dear friends. Okay. When I talk about Rule 42, my dear friends, okay, ITC in relation to inputs and input service. Okay. The first thing that you're supposed to do is, whenever you look at the question, okay, just focus on only one aspect of the question, and that is inward supplies. Attack on that. Purvi, just attack on that. So entire question, just focus on where have you made the purchases, be it input service or input goods. Okay, it doesn't matter. Just focus on that. As soon as you focus on that, do a total of it. Okay. So first thing you will do is realize how much input tax is paid on purchase of goods or service. And which goods or service? Your inputs and input service. Okay, we are not talking about capital goods here. So whatever input tax you have paid, the total input tax that you have paid, right? Let's say you have purchased 10 things. Just give me that amount. Give me that. Give me the total amount. Give me the total amount of input tax that is paid from your pocket while you have purchased either goods or service. Is that very clear? Yes, sir. Okay. Very. It has to be very clear. Right? No questions asked. Okay. No questions asked. Got it? So one is that aspect, right? Now, इसमें से धीरे we'll deduct something. Okay. Slowly and gradually we'll have to keep deducting something, and finally we will come to a conclusion where we will find common credit in relation to taxable supplies. Got it? Yes. Which is eligible for ITC. Simple, right? So here we have all the mess. This is the mess. This is the mess, my dear. To keep proving, start taking out one layer after the other, one layer after the other, and you realize, damn, this was so easy, right? So I hope you've got this. Okay, and use this format in every sum that we are going to do. Use this format. How much ever time it takes, use this format, because once you are, acclimatized with this format, there is a certain level of thinking. And when there is a certain level of thinking, you will follow the thinking, and you are not going to go wrong at any given point of time. And that's what I want. It might take 2 minutes extra, but it will always have the satisfaction at your end that you have done the right sum. And anytime when such kind of sums come, they come anywhere from 6 marks to 10 marks. So if you take that 2 minutes extra, be it, I don't give a damn, because I want those 10 marks completely. Right? Now that you have the total of all the input tax that you've paid on purchase of inputs and procurement of those input service, start reducing. The first thing that you will reduce is, right, the input tax that is paid on only, exclusively on making exempt supplies. So are there any certain inputs that you've only purchased for making exempt supplies? For example, in the in the case that I gave you, there was this preschool service. Let's say, so for example, I've purchased any toys that I've specifically used only in the preschool. I will not use it to teach these inter-C aspirants. Simple. I will take that and I will reduce that amount from the total amount, because clearly I am not getting the ITC of this. Okay, and I'm very clear on that. Okay, now input tax paid exclusively exclusively for the purpose of non-business purpose, right? So it's very clear that the rent that I'm paying here, understand that there is a third element to it. There is a non-business purpose. I'm using it as a home. So I've actually made 3 parts of the premises, and in one third, for example, let's say is preschool, 1/3 is coaching center, 1/3 is my home. Are you getting it? Yes. Then in that case, I'm very clear that this part of the premises is exclusively used as a home. Then in that case, I'm going to use, I'm going to reduce that input tax amount from that part, and I'm going to reduce it completely, right? Perfect. Next is input tax, with respect to block credit under section 17(5). So you are very clear on this part that the purchases that you've done, for example, if you've taken any life insurance premium, health insurance premium, renting service, you've purchased any motor car, there is any food or beverage services, anything that falls under 17(5), you have taken that, and you are well aware that you will never in your life are going to get the ITC of the same. Reduce it. Simple. Now the amount that you are going to get is the ITC that is going to be credited in the e-credit ledger. This is what you are going to use against paying of your output tax. So there will be output tax minus ITC credited in e-credit ledger, that is this amount. I'm so sorry, that is this amount, and this amount will go there. So for example, your output tax is 3 lakhs and your ITC credited in e-credit ledger after subtracting these things is 1 lakh. Simple. 3 lakh minus 1 lakh, 2 lakh, right? I hope you understand the significance of this value that we have just taken out. Yes, right. Very important. Next, my dear friends, understand, we are supposed, our destination is CC in relation to taxable supplies. So understand, here we've just removed the exclusive parts, exclusively for exempt, non-business, 17(5), correct, right? Now, what will we reduce again from ITC credited in e-credit ledger? what are we going to use? Very simple. The first thing will be income tax pay, input tax paid on exclusively making taxable supplies, right? Correct. And taxable supplies, please understand, also includes, my dear friends, what? Correct. Zero rated supplies. So if there are any purchases, there is any input tax that you've paid for making zero rated supplies like exports or supplies to SEZ, you will take that because you will get the ITC of the same, right? Okay, now that you've specifically reduced that amount, what do you have? You have an amazing amount that is called common credit. Because understand, when there is a mess and out of that mess you reduce the exclusive parts, you will have common credit, obviously, where thoda it is used for taxable supplies and thoda it is used for exempt supplies. Thoda. I hope you understand that kind of Hindi, my dear friends. Okay, yes. Okay, now that we have common credit, understand it will have three elements. This common credit will be used for business purpose, non-business purpose, exempt supplies and taxable supplies. If we get rid of these two, we will finally be left with this. As simple as that, right? So now let's get rid of them ASAP, right? So I will reduce, okay, CC in relation to non-business purpose. So here understand, government has taken an ad hoc rate. This is a rate provided by Rule 42. It is not because I like this number. Okay, and government has said is whatever is a common credit, multiply 5% to that ad hoc rate. Whatever the amount comes, just reduce that, and we will consider that this is the percentage representing non-business purpose, and we will reduce it from the common credit, right? Minus, and obviously reduce it only when the question mentions that the common credit also has a part of non-business purpose. Otherwise, don't reduce it. Okay, this is not like your customs ka SW is that even if it is not there, you will reduce it. No, read the question. Only when it exists will you reduce it. But if it does not exist, then you will not reduce it. Okay, minus CC in relation to exempt supplies, right? Now in this, it's a very simple concept. Whatever the CC is, multiply that with exempt turnover divided by total turnover. Whatever the amount comes, reduce it, and finally you will have, my dear friends, CC in relation to taxable supplies. Lovely. Yes, my dear friends. Now understand, this is the, so आपको इसका ITC मिलेगा, you will get ITC for this amount, right? You will get ITC for this amount, and you will also get ITC for this amount. Do you remember which were exclusively used for taxable supplies? So you will add both of these things. Okay, you will add both of these things, 1 and 2, and that is your total ITC amount. Got it? Perfect. Okay, now understand how will you present it in the exam. So what are your output taxes? You will get to know with the help of sales figures and the GST therein. But understand, minus ITC. Now when I say ITC, what is the ITC amount that you will reflect here? Correct, it is the ITC that is credited in the e-credit ledger, right? Sir, but that is not the total ITC. This is right. Okay, no, just hear me out. Output tax minus this amount, you will directly take it. Okay, now understand. One simple adjustment you will do is whatever, okay, CC is in relation to, okay, exempt supplies. So sorry, CC in relation to exempt supplies and non-business purpose wala case, you will have to add it to the output tax liability. Yes, okay, I will just mention it here. You will have to add it to the output tax liability. Now that's their style. There are two ways: either you reduce it from the ITC or either you add it to the output tax, and that is what they follow. So you will add it to the output tax liability. So there will be output tax liability. Okay, then there will be CC in relation to exempt supplies or non-business purpose, and then you reduce that by ITC. Okay, that is ITC credited in e-credit ledger, and finally, my dear friends, okay, you will get the net tax payable in cash. Okay, net tax payable in cash. Net tax payable in cash. Simple. Very, very simple. Very, very simple. Are you getting it? Yes. I want all of y'all, okay, whoever is watching, Purvi, Smith, or there are other two people, I want all of y'all to give me a thumbs up that, sir, we've understood this. Only then will I go ahead. Please, guys, tell me, what is it like? I am able to gauge it. Smith, Purvi, yes. Okay, lovely. So now this is it. This is it. Now the entire game is, you know what? That ideally, sums will be like, they will ask you, okay, they will ask you to, or they will manipulate what is exempt turnover, what is total turnover, right? You need to know the exact things. Only if you know, you will be able to arrive at the right conclusions, right? So we are going to directly hit the sums that will help you understand what we are supposed to exactly do, right? So now this is done. Okay, I am again revising it. Please do it so that the concept is clear, and then we are going ahead. So pehle, the first things first. Whenever in the question, first read the question, and whenever you see, you know, there are 4-5 questions asked, like what is the amount of ITC to be credited in e-credit ledger, what is the CC in relation to exempt supplies, please calculate the net net tax payable in cash. Also calculate the CC in relation to taxable supplies. Any 3-4 questions like that, and you know that you are up for Rule 42, Rule 43. Okay, obviously Rule 43 mein you will see that machinery likha hai, but in Rule 42 understand it will be nothing like that. It will be only inputs and input service. The first thing that you will do is just neglect everything in the world. Okay, pick up the GST rates on goods or service, and second thing is just focus on purchases, that is inward supplies, and just start blindly writing, okay, what is the total input tax paid. Usme se, now that we have the total mess, the first thing that you will do is reduce and start. Whoever is listening to me, just close your eyes, and before I say, you should be telling me, okay, what to do. First is input tax paid only on exclusively on making exempt supplies, reduce it. Input tax paid exclusively on non-business purpose, reduce it. Income tax paid on making purchases of block credit, that is 17.5, reduce it. The amount that you will get will be the ITC credited in e-credit ledger. ITC credited in e-credit ledger. Okay, now input tax paid on exclusively making taxable supplies, reduce it. The next thing is common credit. Now when it comes to common credit, my dear friends, common credit, okay, you will reduce that amount, okay, with respect to CC in relation to non-business purpose. Second is CC in relation, what is that amount? By the way, CC multiplied by 5%. Next is CC in relation to exempt supplies. In that case, CC multiplied by exempt turnover divided by total turnover. So whatever is with respect to exempt turnover, which is why that is put in the numerator, you take that. You need to know what exempt turnover is, what total turnover is, and I will explain you that once we are done with both Rule 42 and 43. Okay, there is the common thing they share is what is the definition of exempt turnover and total turnover. So we'll wrap it up, but we'll wrap it up together. Okay, that's it. And the last thing that you will be left with is CC in relation to taxable supplies. So the total ITC you will get is this amount to an ऊपर का exclusively वाला amount that. Okay, that's it. But that is only when they asked you total ITC, right? But frankly, they generally ask you 3 questions: amount to be credited in any credit ledger, CC in relation to exempt supplies, and third is net tax payable, right? So net tax payable में take the output tax, take the ITC which is credited in any credit ledger, and whatever CC that you are supposed to reverse in relation to exempt supplies and in relation to non-business purpose will be added, okay, in the output tax liability. Very, very, very simple. Okay, follow this method for formula, okay, when we are hitting the question. So there किस बात की, okay, नहीं किया पूछ. Let's start, my dear friends, with the question. Come on. Where is the question, guys? Come on. There it is. Okay, so let's start with all-in-one. Yes, let's start with, my dear friends, all-in-one. All-in-one store is a retail chain, and I really want you all to put that question in front of you. This is a module question. अपना क्या है? Question number 18, page number 8.134, right? Let's start. Okay, and I really want that you start giving me answers and be actively involved and not just be completely dependent on me. You will have to get the answer before I get that. Okay, all-in-one stores is a retail chain, okay, of a departmental store having presence in almost all metro cities across India. It both supplies exempt supplies and taxable supplies which are sold in such stores. The stores operate in rented properties. Fair enough. All-in-one stores pays GST under the regular scheme. Very important. Otherwise, this sum solved नहीं होता. In Mumbai, the store operates in a rented complex, a part of which is used by the owner for his personal residence. Okay, so already you know that the input service that you're taking is partly for business and partly for non-business, right? Okay. Now first is aggregate value of items sold, taxable items, items which are exempted, items which are not taxable. Okay, so understand this information. Okay, whenever you will have at your outset, you will tag it as this is relation to sold, or for that matter sale. Okay, but what did I ask you to compute first? Total input tax. Okay, then you have a Mumbai store transfers okay to another store located in Goa, right, and उसका valuation दिया है. Third is aggregate value of various items procured for being sold in. Okay, now this is something that we require. Procured. Fourth point, freight paid. I will take this also. Again, freight paid to GTA. Okay, this is for what taxable items, this is for exempted items. Fair enough. And this is for non-taxable items. So I have taken 3 GTA services for 3 different articles. One is taxable, exempt, and another is non-taxable. Non-taxable का classic example can be anyone: 5 petroleum products, alcoholic liquor for human consumption, anything. Next we have monthly rent payable for the complex. Okay, and the specification is given out there that 1/3 of the space was actually used for a residential complex, right? So 1/3 was for business and 2/3, my dear friends, was for correct. Okay, 1/3 was for non-business, I'm so sorry, and 2/3 was for business. Activity of packing of items and putting the label of store along with the price has been outsourced. Okay, amount paid for packing of all items is 2,50,000. Understand, they have taken these packing services for all the articles, and all the articles, remember, are not taxable. Some are taxable, some are exempt, and some are non-taxable. So this actually looks like a common credit, though we don't need to find it per se, but I'm just talking in general, right? Salary paid to the regular staff. Will GST apply here? Understand, they have also inculcated something like a supply concept. So salary जब भी आता है, okay, the first thing that you will remember is, damn, I read this in 7.2 and 7.2 is not a supply. So there is no implication of GST. The employee will never charge GST on the salary. So if there is no GST, simple, there is no input tax that I have paid, and which is why it will not be included in my computation, because all I'm focused right now is that what have I incurred, मेरा जेब से कितना गया है. That's it. Next is GST paid on inputs used for personal use. Okay, so I clearly know that these inputs that I've used are only and only meant for personal use. Correct. Exclusively for personal use. I know I have to remove it somewhere. GST paid on rent-a-cab services for transportation of employees not obligated by law. You know this. इशारा किसकी तरफ है? 17.5. GST paid on items given as free samples. Again 17.5. Right? Block credit. So these are the things that you need to find now. ITC credited to e-credit ledger. Fair enough. Common credit. Okay. ITC attributable to exempt supplies. Okay. Eligible ITC out of common credit. Okay, so common credit के दो parts होंगे, एक होगा exempt, एक होगा common credit. So you have to find out both of them. And the last is, my dear friends, net GST payable. Okay, fair enough. What is the so for RCM the applicable rate is 5%, and for others, my dear friends, it is 18%. Okay, so there is, so whatever you're supplying, either goods or service, doesn't matter, 18% is applicable for both purchase and for both sale, except those cases where GTA services come into play, where tax is payable as per RCM under 5%. Okay, all inward supplies are procured from registered suppliers. Wherever applicable, the amounts are exclusive of taxes. Right, I understand that. Okay, now let's start, my dear friends. Let's start. Okay, so now let's just blindly follow the format. Yeah, let's do that. Let's do that. I would really like to do that. Okay, so let's find out this amount. Let's find out this amount. Okay, total input tax paid on purchase of goods or service. Take your calculus फटाफट से. Okay, and hear it guys, hear it. Okay, yeah, let's not waste any time, my dear friends. Okay, so this is sale part, so we will completely dissect it. This is also sale part. Actually, it's a deemed sale part if you have gauged it, right? 7.1c. So the procurement starts from here. Let's start. Okay, what have you purchased? Taxable items 55 lakhs. Okay, so taxable items, obviously the opposite person will charge GST to you. So 55 lakhs ka, okay, we'll directly go, okay, and start with, my dear friends, 18%, right? So the input tax paid here, okay, we're talking about that. Correct? So you will take 55 lakhs, correct? Then what else do you have? Tell me. Let me see if we can divide this screen. Yeah, fair enough. If 55 lakhs, then we have, my dear friends, acha, these purchases are only exempt. So 15 lakhs someone has supplied me are exempt goods, which I will sell as exempt goods only. Okay, so simple. In that case, I will not take 15 lakhs. I will not take 55 lakhs also, because understand, those are non-taxable supplies. So someone is charging me VAT and not GST. So I'm not going to take that, right? Next is, my dear friends, freight paid to GTA, freight paid to GTA, freight paid to GTA. Understand, all these will be RCM, but you will still pay it from your pocket. So you will take into consideration. And that is what, my dear friends, tell me. That is 1 lakh, there is 80,000, there is 20,000. Okay, but understand, my dear friends, you will make a simple different list for that, because in that case the rate is a little different. And that's it. So that is 2 lakh, and 2 lakh pay there is 5%. So that will be 10,000. Done. Next is monthly rent. Okay, we will add 5.5 lakhs here. Simple. Packing, we will add 2.5 lakhs here. Very simple. Salary, we will never add salary, my dear friends, because it's not a supply. GST paid, yes. Okay, now understand. The biggest mistake that you can do is, do you realize here we were actually dealing with value? Do you realize this? In this part of the sum, we are actually dealing with value of supply. On that, okay, I'm thinking, okay, once I add all of that, I will multiply with 18% or 5%, whatever the case may be. 18% or 5%, whatever the case may be, right? That's it. Okay. But my dear friends, when it comes to this, okay, understand that they've already mentioned something like this. They've already mentioned this. Got that? Perfect. Okay. GST paid on inputs, GST paid on renter caps, GST paid on items. So GST लिखा है सब जगह. GST लिखा है. It's written GST. So take that amount as it is. Because what we are finding is input tax paid. Got it? That's 5,000, 4,000, 4,000. That's 8 and 5. That's simple 13,000. Okay. So remember that very well, that when is the question changing from value of supply to GST paid, you need to be very conscious of that, right? That's it. So yeah, so that's it. Here we have this, so we will multiply this with 18%. We have this, and then we have 5, 4, 4. That is GST paid wale cases. So that is directly 13,000. This is 10k. And here what happens to be is, tell me. So it's 55 plus 5.5 plus 2.5, right? और उसका 18% happens to be 11.34, correct? Plus 10 plus 30, right? 11.57. Are we all getting this? My dear friends? Okay, it's very important for you also to respond accordingly, because it's a bilateral conversation and not a unilateral conversation, my dear friends. Okay, so very important for you to also respond accordingly. Just don't make the mistake, because sometimes I often also, while reading, make it, so just make a note of that. That's it. So this is input tax paid on all inward supplies. Fair enough. 11.57, right? So this is the figure that we've got, 11.57. yeah. Now let's figure out input tax paid exclusively on making exempt supplies, right? Let's do that. Okay, so in that case, understand, let's highlight them. Okay, I don't know, but students often confuse here. Sir, we will take 15 lakhs also. No boss, 15 lakhs, it's itself an exempt supplies. But here we are taking, so that is not going to come in the computation only, because we are calculating what? Input tax paid on inward supplies. तो उसमें ही नहीं आएगा, right? Because you have not paid input tax on those purchases. And right now I'm focusing on those input taxes, on those inward supplies where you have paid input tax. But for which supply? Exempt supply. So you have purchased cloth, and that cloth is taxable, but after manufacturing, that finally becomes a shirt, and that shirt happens to be exempt. So I'm talking about that kind of a thing. And in that case, my dear friends, the only thing I can remember is this, which is exclusively for what? Exempt supplies, right? So absolutely, my dear friends, okay, that makes sense. So I will take अपना 4000 यहाँ पे, 4000 यहाँ पे, as I rightly said. I'm so sorry, कहाँ पे था ये? हाँ, 1 लाख है, 80,000 है, तो 5,000 and 4,000 हो जाएगा absolutely. Okay, 5,000 and 4,000 हो जाएगा, my dear friends. Okay, perfect. Because understand, non-taxable supplies also includes exempt supplies, my dear friends. Okay, so input tax exclusively attributable to exempt supplies will be, my dear friends, okay, two things, and that will be very simple. Okay, one is 20,000 का 5%, I'm so sorry, 1,000, and 80,000 का 5% is 4,000. So 4 and 1, 5,000. So we will write that, minus कर दो. Non-business purpose, my dear friends. Okay, the things that we're going to take is very simple. Okay, firstly, if you remember, here we had seen something. Yeah. Let's focus on that. So here we have this thing. So one is 5,000 definitely, and one was the rent of the house. If you remember, yes, this. It's categorically said that okay, 1/3 is used only and only for what? Personal space. So we will make sure that 5,50,000 ka 1/3 is 1.833, plus we will add what? 5,000. Okay, so that's something that we really need to understand, my dear friends. Correct. Monthly rent payable for the complex is 5,50,000. 1/3 of the total space available is used for residential purpose. Correct. Yeah, I'm so sorry, I actually landed up, I'm so sorry, this is what happens, you know, sometimes, a lot of times, my dear friends, these mistakes can happen, you know. So directly, do you remember I did 1/3 of what? 5,50,000. Don't do these mistakes, okay. What you will do is, my dear friends, very simple. Okay, 5,50,000 multiply by 18%, that is 99,000, and 99,000 ka 1/3 is 33,000. So there will be two things in that case, 33,000 and the above one, 5,000. That makes it to 38,000. So we are done with that also. Now, is there any specific services meant only for 17.5? Okay, which are blocked under 17.5? Answer is yes. One is this and one is this, renting and free samples, and the both together come out to be 8,000, right? 4 and 4, 8,000. That is, my dear friends, block credit. So here it will be 8,000, right? So now tell me what will happen here, my dear friends. Tell me. There's 11.57 minus, okay, so this 5 plus 38 plus 8, 51,000, right? So that's 11,06,000. Got it? That is the ITC to be credited in e-credit ledger. Got it? Yes. Now, is there any input tax paid on exclusively making taxable supplies? Answer is yes. Which one is it? Which one is it? Tell me, tell me, tell me. Okay, and as soon as understand, once you are done with the adjustment, cross it completely, right? So that you are over that entire thing and you are not revisiting them back. Okay. Yeah. Is there exclusively used for what? Taxable supplies? The answer is yes. Okay, with respect to this. So 1 lakh or 1 lakh ka 5% is 5,000. So there we have it. And then yeah, I feel that's it, right? So exclusively we will take 5,000. Okay, and also my bad, also the purchases that you had done, right? So you had purchased taxable items, exempted and non-taxable, right? So 55 lakhs ka 18%, 9,90,000, my bad. Okay, you will also take that into account, my dear friends, and that will be 9,90,000 plus 5,000, and that is 9,95,000. Okay. So आज my dear friends, tell me one thing, 11,06,000 minus 9.95, that is 1,11,000, and that is your common credit. That is your common credit. Absolutely correct, my dear friends. Okay, that is your CC. Now, is there any CC in relation to non-business purpose? No. So fine, fair enough. Okay, take it out, take it out, take it out. No confusions, right? Now, is there any CC in relation to exempt supplies? Yes, yes, absolutely, absolutely. Understand, the reason why I've taken CC in relation to non-business out of this computation is because the 1/3 out there with respect to rental service is clearly mentioned. So the remaining is with business purpose, and in business you make taxable and exempt supplies both. Got it? In that case, if they wouldn't have mentioned, then I would have taken 5% flat. Got it? Because there is no other way out. I wouldn't have reduced it ahead, so I will reduce it here. Right? That's how it is. So if I've reduced it ahead, I will not reduce here, and if I've not reduced there, I will reduce it here, because the proportion was clearly mentioned that it is exclusively for non-business. I will have to, write it there. But if it is not mentioned, again it comes into common credit. So which is why, since it was clearly mentioned there, 1/3 relates to the home purpose, personal purpose, simple, no questions asked. I am taking it off. Okay, now it's important that, okay, we know the CC is 1,11,000. Now what is the exempt turnover? What is the total turnover? Okay, very simple, very simple, very simple. Okay, let's focus. So these are the items that have been sold, correct? Correct? I will actually take this off, this one and this one, compute it. What is the total sales? So this is 42 lakhs, 12,3, 42 plus 15, and this happens to be, okay, Mumbai store transfers from Mumbai to Goa, and that is for free samples. So it's a deemed supply because it is between distinct person, and the value declared is 5 lakhs, but the such items are sold in Mumbai 8 lakhs. So the open market value is given here clearly, and we will go with 8 lakhs. So 42 plus 8 is 50, 50 plus 5 is 65. 65 is your total. So total is 65. Now what is exempt supply ka portion? Understand, while you are calculating exempt supplies, also make sure that you include non-taxable supplies, because we've done that hell lot of times while computing registration and composition scheme ka aggregate turnover. That exempt supplies includes non-taxable supplies, nil rated supplies. Okay. Very simple, very simple, very simple. In that case, it happens to be this. It's 12 lakhs and 3 lakhs. It's 15 lakhs. Got it? Yes. So we will have 15 lakhs divided by 65 lakhs. So that's your 1/3. And that happens to be, what is it? Tell me, tell me, tell me. $37,000. Fair enough. Okay, and that leaves me with the final computation. That is 74,000. But are we sure that this is what it is? Just a second. 1/3. Yeah. Oh, I'm so sorry. Just a second. 15 threes is 45. My bad. My bad. I'll just compute it the way it is. I'm so sorry. Mistakes happen. Mistakes happen. To err is to human, my dear friends. That is what we learn from here. Multiply by 15 divided by 65. That comes out to be 25615. We will reduce this from 1 lakh. Two 5,615, and then we have 85385. Okay, this is CC, my dear friends, in relation to taxable supplies, right? But if you want to know the total ITC, then that happens to be very simple. That happens to be 85385 plus ऊपर का exclusively meant for taxable supplies, and that is this one, that is 9,95,000. Right? So plus 9,95,000. That happens to be 10,80,385. Okay. So all I want to tell you, my dear friends, is that yes, okay, even till today, understand, there are times that I also do mistakes, right? Because sometimes you're not attentive, but avoid them. So we will discuss all the mistakes, and you make sure that you never ever do it again, right? Now there are two things. Output tax you need to calculate. So what is it? Very simple. Take the sales amount, and the sales amount happens to be what? Very simple. 42 lakhs, because this is exempt, this is non-taxable, so there will be 42 lakhs and there will be 8 lakhs. So 50 lakhs ka we will take 18%, right? So 50 lakhs ka, if we take 18%, that happens to be, correct, 9 lakhs. And that, my dear friends, okay, we will reduce it with what? Tell me. Okay, very simple. We will reduce it with the ITC to be credited in e-credit ledger, and that is 11,06,000. Okay, 11,06,000. Now, is the story left? Yes, the story is left. CC in relation to exempt supplies, focus on that. There we go. That happens to be 25615. Got it? Yes. Okay. Is there anything else that we are missing? Yes. And that is, okay, with respect to tax that is paid as per RCM, right? But we will always have a different computation for that. We will not club it with this. Never. We will take the ITC, but we will never show it here as a part of this computation. So this is okay, amazing. This has its own sanctity. Keep up with that. Here the result what happens to be is very simple, that your ITC is much more than your output tax. Your ITC is much more than your output tax, and hence in that case, in that kind of a situation, my dear friends, understand one thing, right? There is 9 lakh plus there is 25,615, right? Right, minus 11,06,000, that's 180,385. That is the net tax payable in cash. I'm so sorry, that is the net ITC that is available for carry forward, right? Okay, and there is another computation that we are doing here, and that is input tax liability paid in cash as per RCM. So in that case we have GTA service, right? And in that situation, my dear friends, we are supposed to pay how much? Just compute that. Very simple. Yes, absolutely. We have correct. If you can see, my dear friends, it's 1,80,000, 20,000. Clearly payable as per RCM, right? That is 2 lakhs ka 5%. That is how much? Correct. That is 10,000. And at the same time, what about this? 4,000. GTA paid on rent on cab service availed for transportation of employee, which is not obligatory by law. Now the issue with this is, my dear friends, okay, that they have not told anything with respect to this. So we can assume that he maybe has charged 12%, or maybe if it's 5%, then it is as per FCM. So I don't know what it is. Understand, it's blocked anyway. So they are only going ahead with GTA service, right? And that is 10,000. Okay, and this will be paid in cash. Okay. So the only amount paid in cash is 10,000 because you already have excess ITC. Got it? Yes. Now you have the final question to answer. Do we have ITC credited to E-credit ledger? Yes. That's, I guess, 11,06,000. Do we have common credit? Yes. That is 11,000. Do we have ITC in relation to exempt supplies of common credit? Yes. 25,615 if I'm not wrong. Eligible ITC, okay, that is also what we have calculated, right? And net GST payable, okay, is 10,000 because you have net ITC in excess. तो जो normal output tax liability आपका जो होता है, in that case understand there is no liability because there is excess ITC, but the only cash that you're paying is the input tax liability as per RCM. I hope this makes sense, my dear friends, and I hope this is very clear. Okay, yes, it has taken time. Yes, it has taken time, but solving sums will take time, my dear friends. all I want you all to tell is that it is fine if you are understanding things, fair enough, it will help you grow. Okay? If you all are still there watching, is it the exact way I should solve sums, or I should just possibly give you the treatment of the adjustments and then you can do it at your end? I really want an answer. Because understand, solving entire sum will take time. Right? It will take time. Okay, you all need the approach, right? Fair enough, I will discuss the approach for you. I feel that looks good because completely solving the sum and yeah, that will take a lot of time. Okay, give me a minute. Give me a minute. I'll just get back, and yeah, we can start again. Okay, till that time, okay. If you all want, you all can directly go ahead and try another sum. Not this one, but one Shopee Limited. Yeah, go ahead with this. I want you all to start with this. This is a good sum. Rule 42 again. I'm coming back in a minute, and I really want you to solve this sum. Yeah, one Shopee Limited. Okay. So when it comes to one Shopee Limited, please mark that it is question number 19 that we are absolutely taking into consideration. Okay, now understand the same concept. Pehle, just make sure that what you do is you read the question. Okay, first just take a superficial look of the question, and if there is, let's say if there is sales, right, there are purchases involved, right. Lastly, just check this part. Okay, whenever you are approaching a sum, check this part. If this part is asked, then you are sorted. You should be happy, okay, that exactly you know what is being asked. Either rule 42 is getting applied or rule 43. Very simple. So, and you are going to become pro by the end of this lecture. Trust me on that. Okay. So now that you know that, okay, these are the questions, and this will always be asked in the exam, more or less, right? This or 17.5, a dedicated question on 17.5. Now what happens is that you should be very well aware that, okay, I know this very well. First tell that to yourself and then start with it, because you know that what is the approach. If it's a rule 42 sum, then you are directly hitting the fact, okay, now tell us what is the input tax that you're supposed to pay. The total input tax paid, right? Total input tax paid on inward supplies. फटाफट से चलो कैलकुलेट करो, start calculating. Okay. Yeah, so will I, my dear friends. If it takes time, let it take time. I want to make sure that you are very clear on it. You should be very clear that I am damn happy with this, because there are hardly 2-3 sums on each concept that we are doing. So let's do it all together nonetheless. Okay, फटाफट से, because there are few things that you might realize in the exam that you have made a mistake. Let's say GST paid and taxable value of supplies this much, nitty-gritties. Okay, one Shopee in a retail supplier, and he is basically all the way from Rajasthan. Okay, and here, my dear friends, also remember that they have specifically told, okay, that CGST, SGST, these are the rates. So whenever they will give these kind of rates, CGST, SGST, and all of that, make sure that your answer is also with respect to that space. So in the above sum, if you can see, okay, with respect to rule question number 18. Okay, what they did was, okay, with respect to 18%, okay, they specifically told ignore CGST, SGST for the sake of simplicity. So they've mentioned it there. So only if they mention it, take that stand. If they don't mention it, go ahead and identify whether it's an intrastate supply or interstate supply. What is intra, what is inter. Make sure, these nitty-gritties really will be difficult to identify at the exam end. So this is a nitty-gritty. That should I go ahead with CNS? Should I go ahead with the total amount and then output tax minus ITC the way we did it? So what is asked in the question? Read the question properly and you'll get to know it. Got it? Yeah. So something like this clearly is not covered here, right? They have not said that you can ignore it. So you have to make sure that you take a note of it. Okay. So here we will make sure, my dear friends, that okay, we do write things with respect to that. I will reduce the font size. We have C, we have C, we have S, and we have I. We have C, S, and I. Okay. Total input tax paid on inward supplies. Okay. Now understand, my dear friends, very clearly. Okay. That when I talk about these things, let's start with it. Watch. So this is sales. So we are clearly ignoring that. Purchases, we will directly go to. Okay. Taxable goods purchased. Fair enough. Okay. You know the rates. The rates are very simple here. So with respect to reverse charge, the rate is 5%, and for others it is 12%. Okay. So 12% is the normal forward charge rate, 5% is the reverse charge rate. Okay. So we will take 45 lakhs. Then we have goods not leviable to GST, so not interested because there is no GST charged. Details of expenses, we will take 3.5 lakhs. We will take 50,000. We will take 60,000. We will take 10,000. We will take 50,000, but we will multiply it with 5%, 5%, and again we will multiply this with 12%. Okay, which is clearly not included above, right? So there we go. फटाफट से क्या ले लिया हम लोगों ने, तो 45 lakhs plus 3.5 plus 0.5 plus 0.6 plus 1 plus 5,000, right? Correct. 49.75 multiplied by 12%, that is 55.67. Okay, I think there's something wrong. $45 lakhs, then we have 4 lakhs, and we have 70,000, we have 5,000. Okay, we multiply that with 0.2. Okay, that's 5,97,000. My bad. Then we have this, and that is 2 lakh pay, 5%, that is 10,000. Right? So 5,97,000 plus 10,000, that happens to be 6,07,000. Okay. But understand, 6,07,000 I will have to divide it. That's 3,03,500. So is here. Okay. Now this is total input tax paid. Now I will reduce it with what? Input tax paid exclusively on making exempt supplies, non-business purpose, and 17,500. Let's do it. फटाफट से. exclusively for exempt supplies कौन सा है? Right, वो बताओ आप. We'll start with this. Monthly rent, no, it is a common credit actually. Audit fees again is a common credit. Premium paid on healthcare services, now 10,000 is a 17,500 case. So we will take 10,000 plus, because that is the value, right? उसका 12% फिर उसमें से निकालेंगे. That's it, and free samples 5,000. 12 भी नहीं, 6% because CGST we are focusing. So 15,000 का 6% is 900. We'll remove 900 from here. Then what else have we got, my dear friends? What about GT service for not leviable and for taxable? So not leviable 50,000 का 5% we have got. 50,000 का 5%, that's 2,500. So that will be here. For non-business purpose, I don't think so there is anything like that, no. So we've taken this, we've taken this, this is common. Yeah, we are done. Make sure, my dear friends, that you don't get confused with respect to what you've already marked. Just make sure that the diagram is relatively very cleaner, okay, so that you exactly know what you are doing. So there's 3,03,500, correct, minus 2,500, 3,03,500 minus 2,500 minus 900. So that happens to be, my dear friends, okay, okay. Okay, so are we clear on exempt supplies? देखो खर्चे यहाँ पे तो यहीं से आपको निकालना है, एक चीज हमेशा याद रखना. ओके, तो यहाँ पे देयर इज नो सीन, यहाँ पे देयर इज नो सीन, ठीक है, यहाँ पे देयर इज नो सीन. So this we have covered 10,000, In this we've got 15,000. So 15,000 ka 12% we have taken 1800. maybe mistake कर दिया. नहीं, ये 900 तो सही है. And okay, just a second. Just a second. Yeah. So as you all know, in this sum, okay, very clearly, my dear friends, we have to calculate this. So again, it's a rule 42 sum. Again, we are going to understand and focus on the same very format. Okay, in the first format is very simple. Total input tax paid on inward supplies. Okay, very important, my dear friends, that here we will bifurcate things, because if you will check the previous question, right, it's clearly written up there. Ignore CGST, SGST, IGST bifurcations for better simplicity. And here there is no such specific advice, and which is why we will make sure, my dear friends, that we calculate it separately. Okay, so my dear friends, in this case, the first paragraph is only related to sales, so we will ignore that. Okay, now we will directly go ahead to the purchases. Now there are few purchases which are as per FCM and few purchases which are as per RCM, and the purchases which are as per FCM are subject to 12% and RCM is 5%. So we will go ahead accordingly. Now if I have purchased taxable goods 45 lakhs on which I must have paid 12%. Okay, so understand there are two columns that we are making: 12% wale purchases, 5% wale purchases. So here 45 lakhs, yes. Second is, will we ever pay tax on this? No, because these goods are only non-taxable. Monthly rent 3.5 lakhs, yes. 50,000, yes. 60,000, yes. These are all taxable services as per FCM, 12%. Premium paid on 10,000, yes. 50,000, 1,50,000 GTA service that you have taken to supply taxable goods and non-taxable goods. This is subject to 5%. So there will be 2 lakhs. But as per 5%. Okay. So 2 lakh, my dear friends. 5% happens to be 10,000. Right? And last is 5,000, which is not included in the 45 lakhs ka value. Here it is not included. It is over and above that, and which is why यहाँ पे भी आएगा 12%. Okay. Again, understand GST paid नहीं लिखा है यहाँ पे. Goods given as free samples has been written. Okay. So you will include this. and we'll add 5,000. Now the total here happens to be 45 lakhs plus there is 3,50,000, there is 50,000, there is 60,000, there is 15,000. That happens to be 4,97,000 plus there is 10,000. So that's 49.85 multiply by, okay, I guess that's where I'm making the mistake. I'm so sorry. That's where I actually made the mistake. I'm so sorry. Yeah, 49.7 lakhs पे मुझे 12% लगाना है. Right. So 49.75 पे 12% is 5.97 and if you add 10,000 that's 6 lakh, 7,000 in total. Okay, now you divide it by 2, that happens to be 3,03,500. Okay, fair enough. Now you will reduce input tax paid on exclusively making exempt supplies, 17.5 wale cases, and non-business purpose. Right. Focus on yeah, this, absolutely correct. We will focus on this. So this is common credit, this is common, this is common. This is 17.5, so 10,000 I will write here plus, if there is any, I will freight paid for not leviable to goods. So 50,000 का जो 5% है, right, that is basically 2.5%. okay, that is what needs to be corrected. And here 5,000, 12%, that is 6%. So that's 50,000 ka 2.5%, 1250, and that's 15,000 ka 6%, it's 900. There's nothing with respect to non-business purpose. So now we have 3,03,500 minus 1250 minus 900. So that's 301,350. And yes, this is ITC to be credited in e-credit ledger. Got it, my dear friends? Yes, absolutely. Okay. Correct. Thanks a lot, Purvi. Thanks a lot. Next is, my dear friend, very simple. ITC credit and e-credit ledger. Now what is the thing that you will reduce? Input tax on exclusively making taxable supplies. Again, remember, it's 6% that we need to multiply, so obviously it is clearly 45 lakhs that we will be taken into consideration, and the GT service out here, right? So 1,50,000 पे there will be 2.5%, and वो 45 lakhs पे there will be 6%. How much does that happen to be? Okay, perfect. So 45 lakhs का 6% and 1.5 lakhs का 2.5%. Okay. Okay, so that happens to be 27,350 and that happens to be 27,600. Okay. Now this is your goddamn common credit. Yay, ooh la la. And now you know what to do, my dear friends. Yes, CC in relation to exempt supplies. Now you know the CC is 27,600. You will multiply that with exempt turnover divided by total turnover. So what is your exempt turnover? Your exempt turnover is written here. If you can see, 10 lakhs, 50 lakhs. So 60 lakhs is your total turnover. 10 lakhs is your exempt turnover. So that happens to be 27,600 multiplied by 10 divided by 60. So that is 4,600. You will reduce that, my dear friends. Okay. Now 27,600 may say 4,600 is gone. That is 23,000. Right. Now this CC is in relation to taxable supplies. I got it. Okay, so that is 23,000. Okay. In relation to taxable supplies, total ITC, if you need that figure, happens to be obviously 23,000 plus this amount. 2,73,750. Okay, so your this plus 273,750 happens to be 296,750. Okay, just for information. And now, okay, which is something that we need to understand is that input tax payable as per RCA. Understand, we will always compute this separately, always. So that is GTA service, right? CGST, SGST. Now in this case, okay, GTA service in relation to taxable supplies and in relation to non-taxable supplies, right? What is it? So the freight paid here is 50,000 and here is 1,50,000, correct? So what is 1,50,000 ka 2.5%? 3,750. What is 50 ka 5%? 2,500. So total happens to be okay. Oh, I'm so sorry, कुछ तो गड़बड़ है, रुक जा. This is 1250. I'm so sorry. This happens to be 5,000. 5,000. Input tax payable in cash. Okay, and the next is, my dear friend, very simple. Your net input tax ka net tax liability as per RCM ka computation. And what is that, my dear friends? Very simple. Your output tax liability CSI in your ITC. Now ITC reflected in e-credit ledger happens to be what? Check, go check. 3,01,350. 3,01,350. Then what is the output tax liability here? If you understand, this is taxable supplies, and that's 50 lakhs ka 6%. Okay, 3 lakhs. That is your output tax payable. Acha, your ITC reversal in case of CC in relation to exempt supplies happens to be bata 4,600. Okay, that's it. You're done with this. So that's 3 lakh plus 4,600 minus 301,350. 3,250. Gotcha. That is net tax payable in cash. And next upar wala 5,000 in cash. So 1 and 2. 1 and 2 total happens to be 8,250. Total amount payable in cash. Okay, that's how, my dear friends, with this clarity, okay, understand, you can easily crack any damn sum. With this clarity, you can crack any damn sum, my dear friends. Okay, just make sure your parts are very clear. What will you include in output tax, ITC, RCM wala computation? Okay, because if you are clear in your steps, trust me, you will always have the confidence of doing anything and everything. So follow the steps, follow the Bible. Got it? So this, my dear friends, happens to be, okay, Rule 42 and questions related to Rule 42. Right? Now we will do a question related to Rule 43. Right? And then, okay, there will be a question again which is applicable for both Rule 42 and Rule 43, because the entire sum only is dedicated for exempt supplies and taxable total turnover, exempt turnover and total turnover, right? So there are two questions that we will be doing, nothing very great. Okay, two questions, but very two important questions that covers all the adjustments. Alright, so let's do that and let's wrap it up quickly. Fatafat se, chalo. Okay. Confidence aa raha Purvi, Avni, are you all getting that confidence? Right? Okay. So fatafat se let's start with Rule 43. Okay. Now my dear friends, with rule 43, understand we are talking about common credit, okay, CC in relation to capital goods. So there are times, my dear friends, where you will purchase capital goods and there will be GST paid on that, and you are making taxable supplies. Understand, you will get the entire ITC. But what if you are making exempt supplies, only exempt supplies? You will not get the ITC. But what if you partially make taxable supplies and partially make exempt supplies? For example, from one capital goods only you are producing, okay, shirt and, for example, t-shirt. So t-shirts are exempt and shirts are taxable. So now in that case, what will be the treatment of ITC? Will you clearly get it or will you not get it? Will it be allowed or will it be disallowed? Okay, that is what we need to understand. Now the question is very simple. With respect to that, rule 43 will help us. Shri, rule 43 will help us, Purvi, absolutely. Okay, now understand. There are three situations, okay, with respect to rule 43 that we need to clearly understand. Okay, there has to be no mess involved. You have to be damn clear in this. Okay, and the concept is very simple. When it comes to rule 43, my dear friends, there are three situations. Situation number one, that on day one itself, okay, you have purchased capital goods on which you have paid your GST, that is your input tax, and from day one only, okay, you are making both taxable supplies and exempt supplies. Okay, both taxable supplies and exempt supplies. So on day one itself, you know what, the input tax, the input GST that you have paid, that is common credit. Okay, it will be categorized as common credit on day one itself. On day one itself, no questions asked. On day one itself, it will be categorized as common credit. Okay, now I will tell you the significance of the same when we actually do a sum, but I hope you've got it. The reason on day one itself, when you purchase the goods, okay, you will do two things. First, you will directly take the entire ITC in your e-credit ledger, and obviously it will be visible because the supplier will file 1 and you will get it in your 2B. You can easily take that credit in your e-credit ledger. It will be reflected, in fact. Okay, so now that you've taken it in your e-credit ledger, you will take the entire ITC, but understand, you cannot take the entire ITC. A certain part of that also belongs to that supplies that you are making, which are exempt supplies. So you will recognize complete ITC. So the step 1 will be here: take or avail entire ITC in your e-credit ledger. Got it? For example, the purchase of the goods is 10 lakhs and ITC happens to be 1 lakh. I recognize 1 lakh completely. Take it. So if your output tax liability is 2 lakh, ITC is 1 lakh, your payable will be 1 lakh. Got it? Simple. That's what I mean by that. Second is, understand, certain portion of that does belong to exempt supplies. So you will have to reverse some ITC to the extent it relates to exempt supplies. Now how will you do the reversal? Very simple. Understand. Tell me one thing, with the help of that capital goods, the exempt supplies that I am going to make, is it going to happen in 1 day, 1 year? No, right? It will happen over a period of time. It will happen over a period of time. So we will take into consideration the life of asset, and in GST, the life of any capital goods is assumed to be 5 years, 60 months. So government says that over a period of 60 months, this person is going to produce exempt supplies, and which is why over a period of 60 months only I will do the reversal. That is, I will do the reversal every month in which it is making exempt supplies, right? So every month there will be thoda thoda reversal, thoda thoda, hadu hadu, small small. Are you getting it? Yes. Okay, and which is why whatever common credit that you have recognized, take that as the numerator, divide it by 60 months and multiply that with exempt turnover divided by total turnover. Very simple. Very simple. Okay, perfect. And that's it. You're done with it. You are done with the first case. This is case 1. Okay. What is case 1? I'll explain you again. That you've purchased the capital goods. Okay, what is case 1? Okay, understand it very clearly. You've purchased the capital goods. Okay, and now thoda capital goods you are making taxable supplies, thoda capital goods you are using it for making exempt supplies. In that case, whatever input tax is paid, understand, okay, the first thing that you will do is avail ITC completely, right? But you also know in your deep down bottom of the heart that the capital goods that you've purchased are also partially used for making exempt supplies. In that situation, please try and understand, you will also have to do reversals. Can you do reversal in one shot? No. Because can you take the benefit of entire capital goods in one day? No. You will produce those exempted goods over a period of time. That is why you will also reverse over a period of time. That is why whatever the common credit is divided by 60, multiply by exempt turnover, total turnover, and that you will do it for the rest of your life. That is for the next 5 years. That is 60 months. Done. Is that very sorted? Yes, sir. Okay. Next, case 2. In case 2, my dear friends, concept is very simple. That initially when I had purchased the goods, okay, understand, my dear friends, when I had purchased the capital goods, okay, I was only making exempt supplies. So for example, I have purchased capital goods, GST paid on that, correct? Input GST paid on that. I was only making exempt supplies. Now, understand, my dear friends, in this case, you will obviously not get any ITC because there is no output tax liability at all. Right? Fair enough. Now, you have not recognized ITC at all because you are not making any taxable supplies. You are only making exempt supplies. Fair enough, makes sense. But let's say after 3 years, just it can be any period, 1 year, 2 year, 3 year, 4 year, any year. I'm just giving a random example of 3 years, right? What happens is the same capital goods that you had purchased, apart from making exempt supplies, are also now making taxable supplies. So initially it was only manufacturing t-shirt. Now it is manufacturing both t-shirt and shirt, and one happens to be taxable, the other happens to be exempt. But understand, my dear friends, in this case, that thoda taxable, thoda exempt, thoda taxable, thoda exempt. Now what? Because capital goods for the next 2 years, because understand, out of 5 years, 3 years is used, so the next 2 years it will be used for both taxable and exempt. In that case, government said that where initially your CG was used only for making exempt supplies, and later it is used for making both exempt and taxable supplies, then in that scenario, what are the steps? Very simple. Step number 1, recognize full ITC in your credit ledger. Yes. So for example, that goods that you purchased was for 10 lakhs. Input tax was 1 lakh. Take 1 lakh entirely in your ITC. E-credit ledger में पूरा 1 लाख ले लो. Take the entire 1 lakh, my dear friends. Okay. Okay. Now that you have done that, okay, you've recognized the full ITC. Fair enough. Second is, somewhere you know deep down inside that you don't deserve the entire ITC, because for 3 years to understand you are completely doing what? Exam supplies. Then how can you take the entire ITC? Which is why you need to reverse a certain portion. So you need to reversal of ITC in relation to capital goods used exclusively for making exam supplies for 3 years. Yes. So here you will take the ITC, you will take 5% and you will multiply it with the quarters for which it is used only for making exam supplies. And what is that, my dear friends? Tell me how many quarters? 3 years. 4 multiplied by 3, 12 quarters. So ITC minus in this case will be 60%. So let's say if it was 1 lakh, right? Minus 60%. So okay, I'm so sorry, I will multiply it, not minus it. I'm so sorry, I will multiply it. So 60,000 is what I need to reverse, because for 3 years I was only using it for exam supply, so I don't deserve that ITC. So what government says is that you recognize 1 lakh in your e-credit ledger, but this 60,000 that you have, you will add it to your output tax. Liability. Got it Purvi? Got it Ami? Yes. Okay. तो recognize 1 lakh का पूरा करोगे, but 60,000 you will reverse it by adding to your output tax liability. So net you recognize that 40 only, but you will not do 1 lakh minus 60. No, there is a certain way, and you will respect that way. Simple. And the other thing. So understand that 3 years का हिसाब you have done. That 3 years का हिसाब किताब you have done. Now you are supposed to, now you are left with 2 years. Now understand, in that 2 years you are also making taxable supplies, you are also making exam supplies, you are also making taxable supplies, you are also making exam supplies. So you will get ITC, but you will also have to reverse a certain part of it. And how much will you reverse? Very simple. Okay. Very simple. Whatever your common credit is, that is your entire 1 lakh divided by 60 multiplied by exam turnover divided by total turnover, and this you will reverse for entire 5 years? No, only 2 years. That is only for the next 8 quarters. Because only for the next 8 quarters, every month you are making some taxable supplies, exam supplies, taxable, exempt, taxable, exempt. So in whichever month you are making, take the figures of that month and reverse that amount accordingly. And if in a certain month you don't reverse in that month. Simple. Okay, that's it. And why is it CC divided by 60? Okay, CC is your entire 1 lakh, right? Why have I divided the entire 1 lakh with 60? Why not let's say 40,000 with 60? Because understand, 60 means 5 years. 60 means 5 years. तो 5 साल पहले क्या वैल्यू था इसका? 10 लाख, 1 लाख GST. So I have to take the entire ITC. Because I'm also taking the entire duration out here. So from day 1 I'm calculating. So the entire value divided by 60. Got it? Yes. That is why they are taking into consideration. If they would have taken the ITC wala amount, ITC to be credited in e-credit ledger, if they would have taken that 40,000, then I would have taken, understand, 60 minus 3 years का quarters. That is how much? 12? Yeah. 12 नहीं, 4 हाँ 12 करेक्ट. तो 60 माइनस क्या है फिर? ऑब्वियसली मैं क्या है 5 साल में से क्या है 3 साल माइनस कर देता. 5 साल के क्वार्टर से 60 क्वार्टर, तो 3 साल के क्वार्टर हुआ है 4 3 सा 12. 4 3 सा 12 होता है क्या? हाँ करेक्ट, माय बैड. So I would have done that my numerator is 40,000 and my remaining life happens to be, let's say for example, 2 years, and 2 years is very simple, 8 quarters. I would have done that. Got it? So all I want to tell you all guys is very simple, that understand what is happening, understand what I'm talking about. Got it? Correct. Okay, so that's it my dear friends. I feel that's it. So what I'm basically trying to understand here is very simple, is that entire 1 lakh here is existing because I have kept 60 months. I have not kept the remaining life here. Got it? So I'm going ahead from day 1. Also understand my dear friends that I will reverse it only for the remaining useful life, right? Because for the first 3 years I have already done the hisab kitab. So perfect, that is the case. So you will take the common credit here and you will divide it by 60 months, multiply by exempt turnover, divided by total turnover. That is the reversal of ITC that you are going to do in relation to exempt supplies. Okay, partial exempt supplies. That's it. So 3 questions, three initiatives for recognize full end ITC, because you have not recognized it on the first place. Second, reverse the ITC for the 3-year period or 2-year period or 4-year period for whatever you have only supplied for exempt supplies, right? And add it to your output tax. And the third, reversal of ITC in relation to the exempt supplies that you are going to make in the next 2 years, that is in the remaining life. And since it is going to be over a period of 2 years, that is 4 and 4 8 quarters, understand it's very important that you also reverse that ITC of CG over a period of 2 years, that is your 8 quarters. That's it my dear friends. Okay, and the last is my dear friends with respect to case 3, where initially you were making taxable supplies, but then you started making taxable and exempt supplies. Now in this case, since you were making taxable supplies initially, understand you must have already taken ITC. You must have already taken ITC. Okay, correct. So now understand you've already taken the ITC, so you cannot take it again back. In that case, you are making only exempt supply, so you must have not taken only. So you take, but here you don't take. Okay. So first step, just for clarification, you don't recognize any ITC as it is already availed. And second scenario, my dear friends, is very simple. Understand, For example, after 3 years, now you make taxable supplies and exempt supplies, right? So understand that for the first 3 years you are only making taxable supplies, now you are making taxable and exempt. So have you already taken the ITC? Yes. Now you have to do just one thing, and that is, since there are 2 years left, since there are only 2 years left and you are making more taxable and exempt supplies, you will only do one thing, and that is reverse ITC. For the remaining period. So all you're doing is CC divided by 60 months multiply by exempt turnover divided by total turnover. That's it. Only one step actually देखने जाएगा. This is also not a step. This is just to remind you things. This is the only thing you will do, because understand, if you would have only kept on supplying taxable supplies, you wouldn't have taken this step altogether. You have taken ITC, and that ITC is correct ITC. But the issue is that you had taken ITC. The issue is that you have taken ITC, and now you are also making exempt supplies. And now you are also making exempt supplies. So now you don't deserve that entire ITC, so you will reverse it. You will reverse a part of it, but only for the next 2 years. Only for the next 2 years. Got it? Absolutely correct. Okay. So that's it. That's all I want to tell you, all my dear friends. So whatever is the common credit, okay. So what is the common credit? Exactly what you would have availed a year, 3 years ago. So 3 years ago you must have purchased for 10 lakh, ITC is 1 lakh. Keep that 1 lakh as the figure here, divided by 60 months, multiply by exempt turnover divided by total turnover. Simple. Okay, that's it. Now let's go ahead, my dear friends. Okay, now that you have completely known about what to include, what not to include, and what to do and what not to do, we are directly hitting the sum. Let's hear it. So the sum here, my dear friends, is question number, yeah, there we go, question number 17. Let's hear it. Question number 17. Valuation as in customs valuation or GST valuation, Amal? Which one are you talking about? Customs, yes. I am taking a full-fledged session on customs. And I'm actually taking it day after, 22nd. Tomorrow I'm going to talk about appeals and revisions and offenses and penalties. Customs I am definitely taking on 23rd, a full-fledged session where I will revise the concepts, and then later we will directly hit the sums. Okay, and it will be amazing. You will be amazed with the way you are able to solve sums after that, because I've literally categorized things, and it will be really helpful to you. Don't worry. Okay, now question number 17, my dear friends. Let's hit it. Come on, come on, come on. Help me, help me, help me. XYZ Private Limited is a manufacturing company registered under GST in the state of Uttar Pradesh. It manufactures 2 taxable products, alpha and beta. Okay, and an exempt product, that is gamma. So initially, while you were purchasing, you were actually making goods. You are making alpha, beta, gamma. Alpha, beta were taxable, gamma was exempt. Okay. Then what happened? On 1st of October, my dear friends, something changed. What changed? Beta got exempted and gamma got taxable. Beta got exempted and gamma got taxable, and alpha remains taxable. So before October, alpha, beta were taxable, gamma was exempt, and after October, 1st October, alpha and gamma are taxable, beta is exempt. Write this information so that you are very clear at your end what you are doing exactly. Okay, now understand and make sure that the questions that you are actually doing have few words. If you don't focus on that, trust me, you will come the game will be completely different. Okay, now XYZ Private Limited has furnished the following information. Okay, now what is that? Machinery U purchased on 1st October for being used in manufacturing all the three products, right? Understand here what kind of columns are we going to make. Very simple. So here I'm going to make, okay, first column, and that is ITC to be credited in e-credit ledger. Second is common credit. ठीक है? Okay. Machine U. Tell me, with respect to machine U, my dear friends, okay, what are your views? What am I supposed to do? What am I supposed to do? Tell me, tell me, tell me, tell me, tell me. So in case of machine U, from day one only understand that it's actually manufacturing, okay, all the three products. That is alpha, beta, gamma, where alpha and gamma are taxable, beta is exempt. So it is making actually both taxable supplies and exempt supplies, and from day one itself understand it is making both taxable and exempt supplies. And that is where we come to case one, that from day one, if you are actually supplying both taxable and exempt supplies, firstly completely recognize your entire ITC in your e-credit ledger, and that is what we are going to do. Okay, and what is that going to be? Correct, 36,000. They've already given the figures. And is that a common credit? I want to hear it from you. Come on, comment. Yes, it is 36,000. It is a common credit, my dear friends. Absolutely correct. Okay, next, my dear friends, happens to be machine V. Now machine V, my dear friends, talks about what? Purchased on October 1 for being used in manufacturing product alpha and gamma. So check the status of alpha and gamma. Alpha and gamma both are taxable. So basically this machinery is used exclusively for making taxable supplies. Simple, I will take the entire ITC, right? How much is it for? 18,000. Should I also write it here, 18,000 here? No! Because it is not a common credit. Is it supplying an ounce of exempt supplies? No. It is only making what? Taxable supplies. I will write it only in e-credit ledger. Simple. Next it is what? Machinery W. Machinery W. In that case, my dear friends, tell me one thing. What will happen? Let's check. Machinery W purchased on 1st October for being exclusively used in manufacturing beta. Now what is beta? Exempt. So you are actually purchasing capital goods exclusively used for manufacturing exempt supplies. You will not get any ITC. Okay, so 50 for nothing doing. Next is, my dear friends, okay, done. Machinery Y purchased on 1st October 4 years ago for being exclusively used in manufacturing beta. From 1st October, such machinery will also be used for gamma. Now this year out here, this word has a lot of relevance, because understand, if you take into consideration, if you don't take this into consideration, that means initially it was manufacturing beta, now it's manufacturing gamma. So beta was taxable initially, now it is exempt. And gamma was exempt initially, now it was taxable. So now what you will interpret is, before it was making taxable supplies, now also it is making taxable supplies, because the goods have changed and so has their nature. But it's not like that. Okay, initially it was manufacturing beta, and now it's not that it's completely shifted to gamma. No, now it is supplying both beta and gamma. That means it was initially manufacturing only exempt supplies, and now it is both exempt and taxable supplies. Got it? And what is the period out here? How much? 4 years ago. Okay, 72,000. Correct? Now, will you clearly take? Okay, what happened? Okay, will you take ITC of this? Yes. How much will be the ITC? Entire. How much it is? Tell me. Entire 72,000. Absolutely. You will take it here. Okay. And so will you take it here. Okay, let me just check just a second. Let me just check, guys. Initially it was making with supplies beta, right? तो बीटा पहले क्या था? टैक्सेबल था. Oh, my bad. It was beta was taxable actually. So initially it was, I'm so sorry. Initially it was only making beta. That is, he was only making taxable supplies. So obviously the ITC must have got recognized. The ITC must have got recognized, and which is why, my dear friends, you are not going to take any amount here. Why? Because the ITC must have already been taken. Got it, Purvi? Yes. Okay. I thought it was exempt, but it is taxable. So initially it was only making taxable supplies, and now taxable and exempt supplies. So ITC to le liya usko already. So which is why I'm not taking it again. Otherwise it would have been okay, implied that I have paid GST once, but I am taking the ITC twice. So that's how it is. Then we will talk about machinery. Z. Yes, absolutely. Okay. Machinery Z purchased on 1 October 2 years ago, being used for manufacturing all the three products. Understand, even in this case, my dear friends, okay, with respect to Y है ना ये कौन सा? Sorry, Z है. I'm so sorry, guys. Okay, this was machinery Y, and this I'm talking about is machinery Z, right? So machinery Z you must have purchased 3 years ago, and understand, 3 years ago when you had purchased it, okay, you were manufacturing all the products. Or 2 years ago, sorry, when you had purchased it, you were manufacturing all the goods. So you must have already taken ITC there, and you must have also recognized that as common credit. So one thing constant that I will keep here is that I will recognize this as common credit, right? So I will not take here, but I will definitely take it here. Why will I not take it here? Because understand, I would have already taken the ITC and I would have purchased 2 years ago, right? And there is another machinery which I just skipped, that is machinery W. What is that? Okay, machinery W purchased on October 1 for being exclusively used in product beta. So that is only and only exempt supplies. Okay, so in that case, okay, with respect to W, you will not take anything. Very simple. Okay, so I'm just repeating it all again. I'm so sorry, there was some confusion. I'm so sorry, I'll just repeat it all once again. Machinery U, it was purchased on October for all the three products. You will take the ITC, right? And you will also take it in the CC. Second, machinery V purchased on 1st October, used only in manufacturing alpha and gamma. Alpha and gamma, so only for taxable supplies. You will take it in ITC, but you will not take it in CC. Third, machinery W, you have purchased on 1st October, exclusively used for manufacturing beta. Simple, beta is exempt supplies as we know. You are not going to take any ITC. Machinery Y, very simple. For 4 years, you had purchased it and you are only using it for manufacturing taxable supplies. Very simple, in that case, you must have already taken ITC. Good enough. But now you are going to manufacture both taxable and exempt supplies. So now you will start reversing it for the next 1 year, that is 4 quarters. So you take the CC divided by 60, multiply by exempt turnover divided by total turnover. But it will happen only for the next 1 year. So what you will do is, in this case, you will take 72,000 in your common credit, but not in your ITC credit ledger wala column. Okay. And machinery Z is 54,000, where you have purchased it 2 years back. So you must have taken ITC 2 years back. So you are now only 54,000 will be reflected, my dear friends, in your e-credit, a common credit ledger. Is that very clear? Right. So with respect to Y, understand that you will take it, but you will take it only in your common credit. Okay. Simple. So here the common credit happens to be 50 and 36, 80, 90, 90 plus 172, my dear friends, is 1,62,000. And in e-credit ledger you have 36,000 and 18,000, 56, 54,000. Simple. Okay. So that is there. Okay. Now understand one thing, my dear friends, that you have 2-3 more adjustment with respect to raw material. Now that is not a big deal, I'll tell you, because in raw material it's very simple. So if it is purchased for alpha, since alpha is taxable, simple, you will get the entire ITC. Beta is exempt, you will not get any ITC. Gamma again is taxable, you will get the entire ITC. So 27 and 18 again, okay, you will mention it here. So the total ITC that happens to be here is 54 plus 27 plus 80, that happens to be 99,000. Okay. So 99,000 is the entire ITC that you are getting, my dear friends. Is that very clear? Yes. Okay. And with respect to common credit, okay, it's very important to understand that is 1,62,000. But CC in relation to exempt supplies, what amount are you reversing at that end? Very simple. 1,62,000 multiply by exempt turnover divided by total turnover. So what is the exempt turnover? Is it given? Yes, it's given here. Right. So total turnover happens to be 15-25 lakhs. And exempt turnover is of beta, and that happens to be 10 lakhs. Right. So that, my dear friends, happens to be 1.62 multiplied by 10 divided by 25. Okay. That divided by 60 months. So 1.62 divided by 60 months. So that's 1080. Okay. I'm so sorry. Okay. So 162 divided by 60 months, correct? Capital goods है इसके लिए. multiply by exempt turnover divided by total turnover, that happens to be 1080. This is what you're going to reverse in this month at least. Okay, perfect. That's it, my dear friends. Okay, so in case there is output tax liability that is being asked, in that case it will be very simple. You will take alpha, you will take gamma, and in ITC you will take amount to be credited in e-credit ledger, and here in output tax you will also add CC in relation to exempt supplies. ठीक. Okay, so what is the ITC in e-credit ledger, my dear friends? बताओ 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 क्या था इसके अंदर? 99,000. So take that. And how much is alpha? 9 lakh multiplied by 18% is 1,62,000. What is gamma? 6 lakh multiplied by 18% is 1,08,000. CC in relation to exempt supplies 1080. ऐसा माइनस करके क्या आंसर आता है, माय डियर फ्रेंड्स? वेरी सिंपल, 172,080. ठीक है, that's it, my dear friends. I hope that makes sense. Okay, I hope that makes sense, right? So this is the level of confidence I want at your juncture, right? And in case, let me just add one more adjustment to this. Let's say there is a machinery A, okay, 10 lakhs, GST is 60,000 for example. चलो 6 लाख ले लेते हैं, GST is 60,000, and if I say that it was purchased 3 years ago for making exempt supplies, and post 1st October it is making taxable and exempt supplies. तो वो taxable and exempt directly बोलने के बजाय I can do it one thing, that I can directly tell the name of the products. In that case, what will happen? First thing, what will you do? Take the entire ITC. So I will write 60,000 here in this column. In this column I will write 60,000. Got it? And in this column I will write 60,000. Okay, so whatever you write in e-credit ledger, okay, if it is a common credit, you will also put the same amount in common credit. Okay, that's it. And the next is, my dear friends, I've recognized ITC, I've taken common credit. Now I will reverse common credit. So 60,000 divided by 60 months, multiply by exempt turnover divided by total turnover. And I will also reverse the period reversal of ITC for 3 years. So usme I will take very simple, 60,000 was the credit, multiply by 5%, multiply by 3 years, 3 years multiply by 4 is 12 quarters. So that is very simple, 5% multiplied by 12 quarters is 60%. 12 5 is 60, yes. So that is 36,000. Got it. Yes, itna I will put into output tax. So I will add this amount in my output tax liability. This will also go in my output tax liability. This will go in my CC, and this is the amount of ITC I will avail. So it will be added to this amount. This whole amount. Okay. I hope this is very clear. Yeah, absolutely right, Purvi. Absolutely right. Okay. I hope this makes sense, my dear friends. Okay. So that's it. That's all I wanted to say. And that's all I wanted to tell with respect to Rule 42 and Rule 43. Now, the last thing, my dear friends, that goes into account is with respect to computation of Rule 42, 43, but what will be included in exempt turnover and what will be included in total turnover, right? What will be included in exempt turnover and what will be included in total turnover. So if in one line I have to tell you with respect to total turnover, you will include anything and everything except excise duty, VAT, GST. बस यही नहीं आएगा. Otherwise you will include everything. Whatever outward supplies you are making, include everything. Taxable, exempt, export, RCM, FCM, I don't give a damn. Interest, everything. Okay? Only in exempt turnover you have to be little cautious. And that I have made a list out here. That in exempt turnover, my dear friends, you will not include excise, VAT, CST clearly. Interest नहीं लोगे आप. Schedule 3 transaction 7(2) not a supply नहीं लोगे. Export freight नहीं लोगे. Duty credit scripts you will not take it. अच्छा, what are duty credit scripts? For example, if I'm an exporter, I will be given few certificates. Okay, duty credit scripts यानी certificates, on the basis of which I can take some reduction in paying my input duty in case I am importing goods for exporting, right? That's how it is. But for example, if I am a person who purchases domestically and then exports, in that case, for him that duty credit scripts are absolutely of no use. So that duty credit scripts he will then sell it off to an importer. Let's say, for example, in that I get a credit of 1 lakh rupees. I will sell it for, let's say, 90,000 to some importer, so that, okay, what happens is he will pay me 90,000, but he can encash a discount of 1 lakh. So tomorrow if his liability is 2 lakh, he has the certificate, so he will only have to pay 1 lakh in cash, because 2 lakh minus 1 lakh, 1 lakh bas. Okay, so वैसा केस. Land and building you will include yes. Transaction and securities you will include yes, but in transaction of securities you will only include 1% of the sale value, purchase value nahi, sale value. And in land and building also, whenever there is sale of land and building, okay, sale of land and building, you will include it, but you will only include the stamp duty value. Okay, and also understand, with respect to exempt supplies, you can also add this. Okay, outward supply where tax is payable as per RCM. Okay, you will include that in your exempt supplies and in your outward supplies. That is your total supplies. I'm so sorry, because it's a sale at the end of the day, right? The government has just equated that with exempt supplies, because understand that with respect to exempt supplies and outward supplies where taxes payable as per RCM, both are actually the same in substance. Because in both cases you don't charge GST, you don't charge output tax to the recipient. One is exempt, and in other case the recipient pays tax. So what happens is that government basically did this so that a person like an insurance agent, if he is making any outward supplies with taxes payable RCM and he purchases something and he pays GST on that, government did not want to take avail ITC on this. Why? Because he is not generating any output tax, and whenever you don't generate any output tax for whatsoever reason, you don't deserve ITC. Is that very clear, my dear friends? Yes, sir. Got it? So government just said that okay, in that situation, include it in your exam supplies under section 17(3). ठीक है? 17(3 में ये बोला है, 17 subsection 3, if you will read it, they comment about three things. That outward supply by taxes payable as per RCM is included in the definition of exam supplies. Second, sale of land and building and sale of securities will be included in exam supplies and total turnover, right? But in case of transaction and securities, only 1% of the sale value will be included. Okay, schedule 3 activities will not be included in exam supplies, and interest will also not be included in exam supplies. Is that very clear, my dear friends? Yes, sir. Okay, now okay, the only question that we need to solve, my dear friends, so that we are acquainted about the concept of this is just one. And that is, कहाँ चला गया यार? Where is it? Come on. ગાયબ થઈ ગયું છે. Here it is. I'm so sorry. Question number 20. Check. Question number 20. I'll just come in 1 minute. So we have Mr. Rajesh, understand. Mr. Rajesh Surana has a proprietorship firm in the name of Surana and Sons in Jaipur. The firm is registered under GST law and has been manufacturing 3 taxable supplies, M, N and O. Now N is basically that supply where taxes payable as per RCM. So technically it is an exempt supply. Okay. As for 17 subsection 3, as we just learnt, my dear friends. Okay. Okay, now turnover of M, my dear friends. Okay, now we will be making 3 columns. One is the output tax liability wala, second is your exempt turnover wala, and third is your total turnover wala, right? So turnover of M and O. Let's hit it. Okay, when it comes to turnover of M, okay, I'll just keep it in front of me. Okay, turnover of M, my dear friends, is 14 lakhs. Now, when I say 14 lakhs, simple, I need to just see and check out what is the rate of GST. So for goods, they've said 12 and for service, it is 18. So obviously, in this case, my dear friends, the concept is very simple. Correct? Yeah. Your 14 lakh multiplied by 12%, that happens to be 14 lakh multiplied by 12% is 1,68,000. Is it your exempt turnover? No. But will it be included in your total turnover? Yes, I will. N is 6 lakhs. But as you all know, N is taxable as per RCM. So to output tax आएगा नहीं. Exempt turnover, yes. Total turnover, yes. O, what is that? Excluding export sales, 10 lakhs, yes. And it's subject to 12% GST. I'm so sorry. 10 lakhs ka 12%. That's 1.2 lakhs. Is it exempt? No, it's taxable. And total turnover. Next is export of M with payment of IGST. So if it's with payment of IGST, you just treat it as a normal supply, right? So what is it? 2,50,000 multiply by 12%. So what does that amount to? 30,000. Is it exempt? No. Is it total turnover? Yes, total turnover में आ जाएगा. Next is export of O under LUT. That is very simple. Zero rated supply. So does that generate tax liability? No. It's the unutilized ITC ka refund that you take from it. Is it exempt? No. But is it total turnover? Yes, you will include it. Consultancy services provided to unrelated clients located in foreign country. Understand? First understand, is this a export of service? For that you need to check few conditions. LOS is in India? Yes. LOR is outside India? Yes. Is place of supply outside India? Yes, because this will be a part of 13.2 and in 13.2 general provisions. Okay, if you know the address of the recipient, if you know the location of recipient, place of supply will be location of recipient. Are you receiving the amount in foreign consideration? Yes. Fair enough. Concept is done. Okay. And you all are distinct person? No. They've categorically mentioned that they are unrelated persons. So export of services. Okay. Very simple. Will that generate liability? No. Exempt? No. How much is it? 20 lakhs total turnover. Sale of building, will it come? Yes. But in output tax liability, no, because it is the entire consideration is after CC or OC, whichever is earlier. It's not a supply. No liability. Exempt supply, yes. How much? So भैया बोला है stamp duty value. I don't have to take the sell price. I have to take the stamp duty value. Stamp duty bill is 2.5 lakhs. So 2.5 lakhs divided by 2% happens to be 125 lakhs. This is also 125 lakhs. Next is interest. Exempt? Yes. So no GST liability. But will it be included in the exempt turnover? No. Categorically said no. But in total turnover? Yes. Next. Sale of shares. Sale of shares is sale of securities. It is neither goods nor service. No GST liability. But exempt turnover? Yes, as per 17.3. But on what? 1% of sale price. So 250 lakhs ka 10% is 25 lakhs, 2.5 lakhs. Total turnover? Yes. That's it. Legal services is inward supply. We will not take that into consideration. And these are common input and input services, right? That's how you take the total. The total here happens to be, my dear friends, 14, 20, 20, 30, 32.5, 42.5, 62.5, 65, 69, 69 and what 25 happens to be 194. And what is this? 6 lakh plus 125 plus 2.5, 133.5. and इसका जो होगा देख लो आप So this is what it is, my dear friends. Okay. Rest of it is very simple. You have got legal services, which is used only for making taxable supplies. So in that case, understand product M is taxable, right? So you will get the ITC of it, or you will take it in the e-credit ledger. And common credit, you don't have to figure out. They've already given your common inputs and input services. Okay. So what you will do is very simple in that case. Simple. Whatever is the input tax, you categorize that as your ITC in your e-credit ledger along with the lawyer wala service. Take that entire ITC and reversal में very simple, common का जो exempt portion होगा वो reversal में added to your output tax liability, right? Very simple. And whatever is your output tax liability after calculating this, include that. This exempt wala portion, which is the reversal of ITC wala portion, right? And minus ITC in your e-credit ledger. Very simple. Got it? Perfect. Okay, and that's how you will compute it. And yeah, input tax liability as per RC वो ले लेना, अलग से calculate कर देना, which will be payable in cash. Okay, and that's it, my dear friends. Okay, and yeah, that's it. So major aspect here was to calculate exempt turnover, total turnover. Calculate it together only. Now output tax liability also you calculate it together only. So that entire job is done. Right? That's it. So that's all I wanted to tell, my dear friends. That is Rule 42, Rule 43, and also the entire aspect of exempt turnover, total turnover. This is Karan sir signing off. Your tax cut teacher. I hope this helps, and I hope this instills a lot of confidence in you, Purvi, Avni, Amal, Smith, because it's extremely important for you to understand, my dear friends, that you need to have clarity before you approach. Okay? Because we have to take that beta. It's clearly mentioned here, if you can see. Right? When you take transaction and securities, okay, you will always take 1% of the sale value. You will never take the entire sale value. You will only take the 1% of the sale value. Because understand that what government is trying to say here is that we will not consider that as turnover. We will only consider 1%, that is the brokerage taken on that will be considered as the turnover. Got it? That's it, Purvi. That's the only reason. It's already specifically mentioned in Rule 42, 43. So nothing that we are trying to make something of our own, and these three aspects are already covered under 17 subsection 3, as you can already see here. The value of the exempt supplies under 17.2 shall include all the supplies on which are taxes payable as per RCM, transaction in securities, sale of land and building. Okay, for the purpose of exempt supplies, please do not include Schedule 3 activities. Okay, perfect. Okay, that's it. So that's all I wanted to tell you, my dear friends, and I think we are done, and I hope that really helps you gain a lot of confidence. Yes, Purvi? Are you confident? Are you confident, Purvi? Ami, Avni, Amal, Smith, I hope you all are confident. Yeah. And all those who are watching, I hope you all are confident too. All the very best. Take care.